Julius Baer has posted an outstanding result in 2020, which was possible due to many factors, due to the high activity of our clients and the trust and the proximity that we have with the clients, the fact that our staff has done a fantastic job in this year, but also that our business model, our unique wealth management business model, has worked extremely well in these circumstances, as it has over the past few years. I think looking forward as an outlook, again, we have added to our preparedness. We have shown great resilience in 2020, and I believe we have all the ingredients to operate under different market conditions that we might see again in 2021.
I understand your hubris, but you'll forgive me for pushing back, as we've watched all of the banks that have capital market activities report. We've seen basically superior or higher numbers reported here. Everybody in this space has been a beneficiary of a very positive cycle fueled by the easing of monetary conditions from central banks, of course, and the fiscal stimulus that we've seen thrown into the global economy from governments. So can I repeat my question? As we see the fiscal stimulus and the monetary support wash out and the markets having to refocus on economic fundamentals, Philipp, do you think ultimately the glide path on these capital market activity numbers is going to be lower? That's just inevitable.
Now, obviously, I think if you look at this in the longer term, I think we are all having the same crystal ball as to foresee the glide path of the economy. First, I don't believe that stimulus measures will immediately go away. I don't think that the world economy is in a state for this to happen. I think there's still a lot of uncertainty about how will we see the economic recoveries now in the post-pandemic world, and the pandemic, by the way, is not completely over. So for 2021, I still believe we will see a volatile environment. We will also see an environment where we see opportunities in the market. And if I take a very near-term indicator, our client activities in January, they have been at a similarly high level as they've been throughout all of last year. So I think predicting this obviously is difficult. On the other side, what you need to do and what we have always done is preparing for the long term. And this is why we've been investing in the last few years, and even more so in the last year, in really continuously upgrading our solution capabilities, upgrading our investment universe, for example, investing in private markets, but also enhancing continuously our service range in concentric circles around the balance sheet of our clients, for example, working with large family offices around value-added services. And this is really at the longer-term evolution, I believe, of the wealth management business, and making sure that we create new profit pools, that we tap into new opportunities as we go moving forward. As you're absolutely right, I think there is a glide path for the overall profitability of the industry, and if one stands still, then one regresses. But we want to move forward.
Philipp, there are parts about this industry, despite having been in it for, dare I say it, 3 decades, I still don't understand. And just bear with me. Why does a company like yours, which is a rare beast, it's trading at a valuation north of most US banks, let alone the Europeans, it's trading about 1.8 price to book going forward as well. Why on earth would you waste 450 million Swissy on a buyback when A, your shares are highly rated anyway, B, if you do well, the shares are going to rally disproportionately? I don't see the point of you using that money for that when you could use it for those opportunities going forward elsewhere.
And I think you can do both things at the same time. Obviously, we've always said, and it has been part of Julius Baer's business model, to have a prudent approach to our own capital management. And we have always been giving back excess capital to the market over time. We wanted to do this, obviously, also this year. We had announced a share buyback, which we had to stop due to the COVID pandemic and to regulatory action. We will continue on that path. We are very highly capitalized right now, and we intend to return that excess capital. On the other side, if we see opportunities, should we see them in the future, I am very confident that we will get that capital back from the capital markets as we have in the past. And so this is no statement that we do not want to grow, and it's no statement that we do not want to take opportunities. On the contrary, we do this out of a position of strength and making sure that we return the capital we don't use today to the markets.